Hello and welcome to BCR. Let's get your trading day started with the following financial news and market headlines.
The US dollar saw a slight decline to 104.05, with no significant highlights in European and American sessions. Despite a post-holiday dip, the dollar's stance remains robust amid strong U.S. economic performance and the Fed's apparent resolve against monetary easing, which may ultimately limit the dollar's declines. Initially, the dollar held neutral around 104.00 as U.S. traders celebrated President's Day off-market, digesting last Friday's PPI data. With overall and core PPI continuing to rise, the dollar index may climb further as January's inflation could prompt a steady analysis by the Federal. This week's focus is on the FOMC minutes, with several Fed officials retaining minutes. As U.S. traders return to the market to digest the latest economic news, gold prices rose for the fourth consecutive day during the North American session. With U.S. Treasury yields falling and news of China's interest rate cuts supporting the rise, gold prices increased early in the week amid weak U.S. dollar buying, leading to a continued recovery to around $2,030. Maintaining a slight upward trend, last week's U.S. economic data showed inflation remains above the Fed's target, extending gold's upward trend for 3 days. The CPI and PPI for January exceeded market expectations, catching traders off guard, which lowered the likelihood of the Fed cutting rates in March and May. WTI crude oil prices softened on Tuesday, falling back to around $77 per barrel due to renewed concerns that global crude production growth will far exceed initial expectations. During Tuesday's Asian session, WTI prices once again rose above $78 per barrel. The escalation of threats to Middle Eastern oil supplies is supporting crude prices. The Iran-backed Houthi forces have launched more drone and missile attacks on ships in the Red Sea and the Strait of Mandeb. Crude prices are rising due to positive economic news from China, the largest oil importer. The People's Bank of China has cut the 5-year LPR by 25 basis points, from 4.20% to 3.95%, to support the troubled economy.
We hope you enjoyed today's market outlook. If you have any questions or topics you'd like us to cover, feel free to leave a comment. Remember to join us tomorrow morning for the freshest news